So lots of folks are saying the market is up way too much. It can't keep going. But the market is the sidebar to the real story. You know, someone once said it's the economy, stupid, and went on to become president of the United States. Now, might be a little impolite for the current president to borrow that phrase, but more economic data out this morning underscores the fact that the wheels of commerce are indeed moving. And each day, we're getting more and more evidence of a strengthening economy. In fact, two items today that really stand out. On the service economy, the ISM non-manufacturing report, which, by the way, surveys purchasing managers and supply executives for the pulse on the service area of our economy, had a headline reading of almost 60. That's significantly above 55, which the street was looking for. But more importantly, it was the best read since August of 2005. All key components are on the rise. Business activity was through the roof, new orders through the roof, and employment improving. 10 industries reported an increase in employment, in fact, including mining and construction. And that brings me to the ADP employment report, which, by the way, it did come in a little bit below consensus. It was only 135,000. But my favorite sector remains on fire. You know what I'm talking about? Dirty fingernails. Goods producing jobs. These are those dirty fingernail jobs, and they continue to rock. And it is great news for the overall economy, especially, though, America's heartland. There's already been a 400% increase in goods producing jobs, according to ADP, from last year, and there's still 3 months left in the year. Think about this. Your monthly average last year, 7,200. This year, 47,000 goods producing jobs each month. Momentum, by the way, in the stock market is something that I've been pointing out to. Listen, you've got to be diversified in your approach, not in the stocks you own, but the way you approach this market. That means breakouts as well as value ideas. And, well, the great news is Wall Street has been so flat-footed. With each day of this rally, I'm seeing buy ratings on stocks that took off a long time ago. And I'll give you an example. This morning, Instinet initiated coverage of Tesla. They initiated coverage for the first time with the buy rating. Great. Target $500. Along with the way, you know, so many folks keep telling me, well, they feel like they've missed this market, and yet the rally continues. Look at this stock. They feel like they missed this one. It's up 1,100% in the past 5 years. So it's something for you to consider when you're considering selling because you got a feeling the market's frothy or at a top. By the way, Standpoint Research lowered their rating on Tesla to a sell from a hold, but that means that they never liked the stock in the first place. Here's the moral of the story. You don't guess when the market has reached the top, especially when the real story is the rapidly improving fundamental foundation beneath this rally. I love it.